Very good morning. Welcome to Chartbusters. Well, as we speak, markets are under pressure. Friday started off on the back foot. Let's see whether or not there's a bit of a pullback from here on. But Mangalam, let's get straight to the top stories.
Let's get straight to the top stories. And if there has to be a pullback, well, this is the time. 17,450 to 17,500 has been a strong support in the past. Let's see whether we can hold on to this or not. First up, we have the Tata Group stocks, all of them in focus. The Tata Steel stocks in particular, as they will merge all the group metal companies into Tata Steel. The management tells CNBC-TV18 that the transaction will be EPS accretive from day one, and the merged companies, in the ones that correct, TRF is the one that hits lower circuit due to an unfavorable merger ratio.
The RBI directs Mahindra & Mahindra Financial Services to immediately cease third-party recovery and repossession operations. The stock dips more than 10%.
Outsourcing giant Accenture reports an inline growth for the fourth quarter, but moderates guidance for FY23, and as a result of which, we have a couple of stocks, just about in the red for Tech Mahindra. The others are just about higher, and that's primarily on account of the depreciation of the rupee.
The rupee slide continues. The currency has now slipped below the 81 rupee mark per dollar. Well, markets are a little bit lower in today's trading session. Actually, at the low point of the day, 17,450. Ruchit Jain joins us to give us his quick take. Hi, Ruchit. Morning. Are you feeling gutsy enough or bullish enough to go ahead and buy the Nifty at this point of time? Or do you think we're going to slide lower, maybe test that 17,200, 17,100 odd mark? What's your take?
Hi, very good morning, Nigel. Well, frankly, I'm not gutsy enough to take a contra call over here.
Okay.
Primarily because data is not supporting any kind of reversals over here. Now, our markets have shown a relative outperformance to the global markets, which was mainly because of the currency, which was showing an outperformance. And after that breakout from that consolidation, which we saw yesterday in the INR, I think we will again fall in line with what the global markets have been doing, and that outperformance has to stop from here on. So there is no more decoupling talks that we were talking about. Secondly, if you look at the FIS data in the index futures segment, throughout the September series, they have been on the short side. They started the series with 45% long short ratio. They went towards 18%, covered some short, but still they are net shorts throughout the series. And right now they have about 28% positions on the long side only. So net positions in the derivative segment remains in the short side. And now they have even started selling again in the cash segment. And in the past, we have seen that whenever they have been shorts in the derivatives and they have been selling in the cash segment, that has put more pressure on the markets. So until we see reversals in all this data, either dollar index stopping to going up or FIs covering the short positions, even technically the chart structure continues to remain bearish. So we are around at swing lows. So we may see some pullback moves, but I think one should not take this any kind of reversals. Look to go short on the pullback moves. The technical structure indicates the probable targets around 17,250, where major supports would be seen. So sell on rise should be the thing that one should do in the markets, and it's only around 17,250. One should review again to take any contra trades.
Take that point. 17,250 to 17,300 is where we have the 50-day exponential and the daily moving average as well. So understandable that there could be some support there. But Ruchit, individual stocks, are you looking to go short now on some of them?
Yes, a couple of recommendations both on the short side, and I think banking and financial space, which has shown an outperformance, have started showing some corrections. And if you look at some derivatives data also, then this correction of last 2 days have been because of combination of long unwinding as well as fresh short formations. So I think this underperformance would continue for time being. So first is a sell call in AU Bank, AU Small Finance Bank, where this pullback move, which was recently seen, has altered around its previous swing highs resistance, and the 20 EMA support has been broken today. So one can go short on AU Bank with stop loss above 618 for probable targets around 600 in the short term. And LIC Housing Finance is one of the stock which has also broken its 20 EMA support today, where the momentum readings have also given a negative crossover, which should put some unwinding pressure in the stock. So go short in LIC Housing with stop loss above 424 for probable targets in the range of 390 to 385.
All right. Thanks a lot, Ruchit, for joining in, giving us your views on the markets as well as individual stocks. Feeling a little bearish this morning, Ruchit, out here. But let's also get you some ideas for profit coming in from our colleagues at Money Control Pro. Madhuchanda Day joins in with the stock that she's been tracking.
Control Print has been a consistent performer despite much upheaval in the external environment. Therefore, with the picking up of the economic activity in the first quarter, it delivered a strong show. As the economic recovery gathers steam, we see steady traction in the business and the higher volume of consumable sales that usually accompanies industrial recovery is positive for its margin. With an installed base of over 15,000 printers, there is a solid revenue visibility. The long-term prospects are exciting in an oligopolistic market dominated by few players, and regulatory requirement coupled with formalization of the economy is paving the way for a strong growth in coding and marking industry. Finally, for control print, the profitability ratios are enticing, balance sheet is strong, business has decent entry barrier, and above all, despite all the boats, the valuation is still reasonable.
Take that point. Thanks a lot for that. With that, we'll simply do a short break. In fact, you don't go anywhere because on the other side, we'll be joined by the management of Mishra Dhatu Nigam after the company's won an order worth about 200 odd crore rupees. Well, over the last few days, we've seen big jumps in all the defense stocks. In fact, a lot of them have actually doubled this year itself. Let's see whether other companies are benefiting from this or not as well. On our radar today is Mishra Dhatu Nigam, after it bagged an order worth nearly 185 crore rupees. S.K. Jha, who's the chairman and the managing director of the company, now joins us to tell us more. Thanks a lot, Mr. Jha, for joining in. We remember Mishra Dhatu was earlier a company, which was known to supply to ISRO majorly. Can you tell us your current order book? What's the size right now? And what's the breakup now from space, defense and others?
First of all, I'll tell you that space business is still with us. And space is around, it has come to around 40 to 45% range. But the defense orders have picked up. Because in the recent past, you must have seen that a lot of acquisition of the defense equipments has started, and all coming from mostly domestic sectors.
Okay. So
because of the emphasis on indigenization, the defense orders are picking up.
Okay.
So today we have around almost 50% coming from the defense side.
Okay.
And rest around 10%.
All right. Hi, Mr. Jha. Good to speak to you after a while. So you're saying 50% of your order book is from defense, or is it of the current revenues of order
defense,
book?
when I say defense means defense and aerospace both.
Defense and aerospace is 50%, and around 40 to 45% is ISRO.
Correct.
That's of your current order book. And your current order book, as I read it, is around 1,550 crore rupees, right?
Yeah.
All right. So how much of that gets executed in this year? Could you give us a sense on that front? And also, you all have been talking about this plate mill that was to be commissioned, or it is already commissioned. There will be cost savings. So can you quantify that and how much you save in this year?
Plate mill already commissioned, and whatever we used to outsource for rolling of our special steels, that is margin steel, to outside, now we are doing in-house. So there we have the substantial saving around 6 to 7 crores per annum, minimum will be saving that. And when I say 6 to 7 crores means it is total net savings after removing our cost of operation and all. In addition to that, this plate mill we are also using for the armored steel. The armored steel we are using for our Rohtak facility, where you might have you might have got the information that that plant also started working.
Right.
And recently we have also flagged almost 15 armored vehicles to J&K police.
All right. No,
and,
Mr. Jha, I just want to get one thing clear. This plate mill that is already commissioned, you're saying 6 to 7 crores per annum? Or is it per, I thought the number was larger.
For one type of product, but in addition to that, we are also making the armored steel. Armored also, we have the business of around 150 crores business is there for this year already we have received.
Okay.
And we are having many more to come now in the coming future. In addition to that, we are also exporting some nickel-based alloys. We have got export order, first export order we have received. And that we are also again rolling from this mill and supplying to going to the Germany. And other export orders also are expected
And-
once we supply this batch.
Right. And what about your overall execution this year of the 1,500 crores order that you have? How much gets executed this year?
This year we are targeting a growth of around 20% from the last year, and last year it is coming around 1,100 crores.
Okay.
It will be the order execution this year.
Okay, and you have commissioned, this plate mill. You're also talking about the Rohtak facility that's got commissioned. So there could be some cost savings. Could you tell us what is the steady state margins you're looking at? And also your working capital days, that's always been stretched. Maybe that's the nature of the business. But what are the current working capital days? And, the last time we chatted a few quarters ago, the management told us that you're looking to bring that down. So what level can you bring that down to? Two parts. One is margins, and then the second part is the working capital days.
Working capital days, still it is on the higher side for our company because we are serving the niche segment of the industry, and there the processing time is more. So this year we were not able to do much, but I am sure from the next year onwards that because already we have 6 months is over almost. So I see that next year onwards it will be reduced because the many orders which we are getting now for the export and all, the turnover time is very less. In fact, we have to supply within 1 month, 2 months like that. So if that volume is increasing, definitely we'll have this numbers will be coming.
Give us numbers, Mr. Jha. What is your current working capital days? What does it come down to? And also steady state margins going ahead. What should it look like?
Margin will remain same, but the number of days, whatever I think we have reported earlier, I am not having the exact figure with me, will remain almost same for this year also.
Working capital days, back in the day, you saw numbers go as high as about 300 plus as well. So I was just wondering how much low will they come to?
No, that 300 days was basically mainly for some of the unique product, but then we have average around mostly 180 days to 200 days max.
Okay, and it will go down to about say 130, 140. Is that what you're targeting?
Right now, we are planning to first go from, let's say, 200 to around 180, 150 in that range.
And what about margins? You said it will remain same. For the first quarter, your margins were around 29%. So is that what you're referring to? 28 to 30%? Should we be working with that broad range?
Yeah, it will remain. It will remain in the same range.
28 to 30%, right?
Yeah.
All
because
right.
the major volume is again the niche segments only.
So,
we are expecting that.
So 1,100 crore revenue this year with 28 to 30% margins. You're believing that maybe from next year on, your working capital days will be anywhere between 150 to 200 odd crores. 50% of your current order book is from the defense itself. Talking about defense, we understand that there was a big opportunity in bulletproof jackets. Have you, begun supplying? Are you, what's the kind of size, potential order size that you can get? And by when?
That requirements are still to be frozen by the armed forces, but we are also eagerly waiting for their requirements to come. And once the requirement is there, we definitely are going to participate. But the numbers, that there are limitations in the production quantity right now. But I am sure that with our, by the time the requirements will be coming, maybe it will come in the last quarter.
Okay.
We will be also improving our production.
But as of now, nothing.
No, as of already we have one order from, we have received from Air Force of around 42 crores.
Okay.
We are executing that. It is a very one of its kind in nature.
Okay.
This is the first time we are being made in India.
All right.
So at the appropriate time, I will inform that when
Got
we
it.
will be completing
Mr. Jha, very quickly, have you heard anything about further divestment or an OFS on the company? The government still holds around 75% in the company. Very quickly.
Yeah, there is a plan to have 10% divestment plan is there for our company.
In this year?
Yeah, it is planned. It was offering, but it has been, Deepam is working on that.
Okay.
So let's see when it will come.
So an OFS is in
today
the...
we are having 70, we are 74% is the government share
Yeah.
and 26% in the public.
Okay, got it. Thanks so much for joining in, Mr. Jha, and giving us that. So we'll wait for that OFS. As you're saying, 10% could be the potential divestment that will take place in this year. Good speaking to you. Time to slip in a short break. Come back. We'll continue our focus on markets and a lot of stocks moving around.
Welcome back. Let's talk about the top story this morning. The board of Tata Steel has approved the merger of 7 Tata Group metal companies with Tata Steel itself. Listed entities include the likes of Tata Steel Long Products, Tin Plate, Tata Metallics and TRF. Nigel has walked across to the big wall to tell us more. Nigel.
Well, the long-awaited big consolidation drive at Tata Steel has finally been announced, with listed entities like Tata Steel Long Products, Tin Plate, as well as Tata Metallics to be merged with its parent, that's Tata Steel. Tata Steel has majority stakes in most companies, though in TRF, they have just around 34% stake. Now, the merger ratios that were announced, they come up for you on the screen, and they were more or less in line, barring TRF as well as Tata Steel Longs, where the merger ratio was unfavorable, which explains why both those two stocks are under pressure post the big run-up we have seen in the last couple of weeks to around a month. Additionally, Tata Metallics is also, smashed in trade, as the street believes, since bulk of its EBITDA is from the non-commoditized DI pipes business. It could potentially get higher valuations, but that's not the case just going by the merger ratio. The benefits include simplification of the group structure as well as synergy benefits. But getting to the key benefit then, as of now, Tata Steel Longs as well as Metallics, they procure their iron ore from Tata Steel and they have to pay close to around 22.5% additional royalty on this purchase, which now gets eliminated post this merger. Additionally, Tata Steel Long's balance sheet, well, it got stretched post the NINL acquisition, so the merger is a step in the right direction. We spoke to the management earlier today and Mr. Kaushik Chatterjee said that the merger will be EPS accretive and also said that there will be more than 1,500 crores of cost savings or synergy benefits due to this amalgamation, bulk of which will come in on the royalty aspect. On that note, though, let's hear out what they had to tell us earlier today.
After successfully merging and integrating Bhushan Steel, it was logical for us to look at the other subsidiaries which are of strategic relevance. And I think with these companies, all of these companies have, the businesses actually have a great future going forward. So first of all, it will be a simplification, and we have in the last 4-5 years taken out across Tata Steel Group about 120 companies. All of these are obviously EPS accretive for Tata Steel standalone. On the other hand, all of these were anyway consolidated because these are all subsidiaries. So after we the minority shareholders, the minority interest part gets absorbed. But otherwise, they were on its own already being part of the consolidated balance sheet of Tata Steel. So that's less of a point. The more important point is to drive the business in the future. And I think that is what will reflect very clearly on the Tata Steel balance sheet. And when I say Tata Steel, I'm always looking at consolidated balance sheet because that's the most relevant one.
Right, so that's about Tata Steel and everything that we spoke about on Chartbusters. We're out of time. Thank you for watching. Trading Hour comes up next.